Traders Brian here with a video on higher time frame utilization. So the purpose of this video is to reinforce the importance of the higher time frames context as it relates to our entry chart. And also what I want to do is describe the two patterns that repeat the most on the higher time frame and how we can trade them on the entry chart. And those two patterns I'm referencing are the John Wick and the B4 jiggle. A slight mistake right there. I'll correct that later. Let's get right into it. Okay, as always, here's the indicator, the suite of indicators that I use on the higher time frame. We're going to go through these very quickly. You can come back to them if you need to build your own model. All right, so I use the bar status over here. You can see the purpose of this is simply to tell me where the bars potentially can close at. Bar status indicator, how to set it up. Order line decorator, this just really useful tool I like once we get into a position and I've got multiple stops. Stop losses, take profits in play just so I can keep track of them. Current day open, high, lows, and close. These are some key levels that I incorporate through the day. These are targets or objectives that market participants typically shoot for. B4 V3 indicator. The primary purpose of this is to generate the up and down triangles, which sets us up to be looking for the John Wicks and the B4 jiggles. Long-term trigger lines, purpose of these, it's a backbone of the trend model, and it also shows at a glance, just the long-term trend. Really easy to read, bullish and bearish. I use a 432 EMA. Purpose of that is the market will really go right to this, have deep pullbacks to the 432 EMA and reverse a lot of times. So it's all neat for me. I plug this on a higher time frame just so I'll know where potential pause or a reversal point is from a very deep pullback. Short-term trigger lines in the lower pane down here. I put these in the lower pane because I don't want them messing up with the chart. I don't want too many lines up here. And I'm really just looking at the momentum. I mean, I could really compress this down to where and thicken this up to where I really just see red and cyan when it's bullish. Ninzarenko bars. The reason I like Ninzarenko bars is the symmetry that they provide, and I know exactly where I want to enter and exit trades. Real easy for me to glean that from these types of bars. Final tweaks. This is how I start out all of my templates. I want the bars, I want the wicks thick, and I want the bars themselves. This is a mistake here. They should be set to silver. Those two, I'll change those when I actually save this, but the bar color should be silver right there. So yeah, I'm going to change this whole palette right here. All right, let's get to the meat of the matter. So higher time frame, what I've got here is I'll give a description on the left-hand side of what we're looking for. And then I've got the higher time frame on the left, the entry chart on the right. So we're going to show you the two patterns that are easiest to trade, most reliable, and what that looks like on our entry chart. So the higher time frame bullish John Wick pullback. The John Wick pullback is the shallowest pullback that you'll get on any bar setting that you happen to be monitoring. For my higher time frame, I have a 36.6. Entry chart's a 22.4. All right, so for the bullish John Wick to be valid, we need to have a B4 up triangle prior to the John Wick forming. Long-term trigger lines need to be bullish, or they're at least 3 closes above both of the lines. So we've got 1, 2, 3, 4, 5 above, and we got the up triangle. So we're good to start looking for a potential trade. Short-term trigger lines are bullish, which means they're cyan in color, and the wick part of this must exceed the low of the prior step, and it actually takes out the low of the prior two steps here. So it's good to go. And what that looks like over here, it looks like a bullish B4 jiggle on the entry chart. So you got the up triangle, you got at least 2 bars pull back on the entry chart. You need 2 bars on the entry chart for a B4 jiggle. You'll see on the higher time frame when I get to that, it's only 1 bar, but slightly different requirement on the entry chart. So you'll see here on this bullish John Wick, the first one, the trend magic stays white, and so we're just entering at the close of this up bar right here plus a tick. Here we have another one, same thing, trend magic is still white during this John Wick, so up close, enter close plus a tick. All right, take whatever profit targets that you're looking for. All right, it's just opposite for the bearish John Wick. I'm not going to go into read all this, but you can see red down. We've got 1, 2, 3, 4, 5, 6 closes underneath both trigger lines, which qualifies. The wick exceeds the 1, 2, 3. It actually goes all the way back 4 steps above and then collapses. All right, so this looks just like the bearish B4 jiggle over here on the entry chart, and we're going to enter trend magic stays black during the pullback for this, and we just enter on the down close plus a tick. All right. Now let's get into the higher time frame bullish B4 jiggle. So let's talk about this first. So the B4 up triangle has to be present prior to the B4 jiggle. Here's the up triangle, rally above, get the cross, we come back at least 1 bar on the higher time frame for the B4 jiggle. We get 2, so price pulls back at least 1 bar, so we get our 2. Price reverses, resumes the uptrend. The only thing that negates a bullish B4 jiggle is if during the pullback there is a red down triangle that's present. We don't have one here, so now we're looking at an entry chart. But on the B4 jiggle, the entry chart can manifest itself in 2 different variations, which causes you to alter your entries. It's variation 1, which during the B4 jiggle over here, the trend magic stays white, which means the trend structure hasn't broken on the entry chart yet. So same rules apply. We enter at the up close plus a tick. Okay, this is variation 1. Let's go into variation 2. All right, so I've got these highlighted here so you can see the difference. No change up here, but we actually have an example where we have variation 1 and 2 present. So this is a good comparison. All right, so we're going to skip right over because we already talked about the rules, but here is the bullish higher time frame B4 jiggle. Over here is the pullback that you're seeing here. So we're waiting till we get at least 3 closes above the trend magic line. You see how it turned black? This is variation 2. Trend magic had a deeper pull. We had a deeper pullback on the entry chart. Trend magic flips to black. So we go 3 closes above the trend magic plus a tick to get in. Try to get what you're looking for. Now over here you can see that during this B4 jiggle, trend magic flipped back to in bullish mode again during the pullback. So we just come up here at up close plus a tick and enter there. Okay, that's all it is for the bullish B4 jiggle pullback. All right, same thing for the bearish. You can see here, red down triangle. We're underneath trigger lines. They're bearish. short-term trigger lines are bearish. We get at least 1 bar pullback, no red, closes down. Here's what it looks like over here on the entry chart. This is the actual pullback right there. So trend magic remains black, so we come down here at the close and plus a tick and enter and get short. Right? That's variation 1 on the short side. All right, higher time frame, bearish B4 jiggle pullback. All right, now we have somewhat of a deeper pullback, so you can check this out. However, it's the same thing. Red down triangle, nice big pullback. Long-term trigger lines are bearish. Short-term trigger lines are bearish. We get up in here. This is the rally right there we're looking at. You can see trend magic flips bullish. We actually get some blue bars in here as well. But the trade is three closes plus a tick. You know, right underneath this right here is where you would be. Would you catch it right in there? All right, variation 2. Okay, so that is the that's the down and dirty on it. So we're more than likely during our live stream, I'm going to start showing the higher time frame alongside the entry chart, because I believe it's going to be a little bit better for the new folks that come in to check out and see what we're actually doing. It's just a little bit easier for me to explain instead of having to drag the higher time frame up into my trading, my live stream monitor. But I'm going to show you another variation here. If you know, again, traders, if whatever you like better, it's the same concept. All right, so over here we have bearish. We get crossed. We see the red down triangle. We see short-term trigger lines are bearish. John Wick pulls up. So you'll notice here that we're under the what this is right here is the 216 EMA channel that I like to use. It really coincides with these pullbacks here. It's a very simple chart, and you may just prefer to use something like this over the markers model that I have that I live stream. So, but you can see here it kisses the 216 and closes down. You're in close down plus a tick, and you're taking that trade. Here you can see we get a crossing, the blue or the up triangle from the B4, the John Wick. This one is a deep John Wick on the entry chart, but look what it does. It's above the 216, above the channel, comes back into the channel probes. So there you've got your entry at the close plus a tick on this John Wick here. Okay, and then you get a 1 bar pullback there. You come back, touch the channel again, and it's up close plus a tick, and you know you've got at least 5 points on that. Here's a deeper one. Let's see. Yeah, so higher time frame. Now the trigger line touches. I know from looking and capturing at least 15 to 1700 of these since March that these trigger line trades are very reliable. They have a better than 70% chance of working out where you make at least 5 points. So let's translate that into the entry chart. So we come into the trigger lines on the higher time frame, and look where this pullback comes. Right inside the channel, we come back up. So you're just looking right here for, this is a little bit deeper, so you're going to go at least that 3 bars up plus a tick. Okay, I'm just giving you, as traders, I'm giving you all types of things you can work with that you can use and adapt to your own time frame and your own style. Another one pulls down, sister kisses the upper envelope of the 216, and anytime I get these red down arrows here, I'm going up at least 3 closes plus a tick. Those are deeper pullbacks on the entry chart. I'm trying to find a really deep one here to show you the value of this channel that works. Yeah. So here we start here we get another one. Pulls back into the channel right there. We come back out, and 3 bars up plus a tick. You can see that's puts you up. You got plenty of room. We come all the way back in, press down a little bit further, but we're still bullish here. You'll notice that the trigger line's actually traded. I didn't really want to cover this in this video, but it complements the 216 EMA channel. As long as these trigger lines remain bullish, if you're using this 216 EMA channel and you get the short-term flipping, as long as it doesn't come outside the bottom of this channel, you're still looking for the long trade. So it's a deep pullback, 3 up plus a tick, and you can get your money there. Yeah, this is even a better one. Look at this deep pullback. They're still wide. Okay, they're still really wide right here on the trigger lines. We turn red again, but I mean, look again. This is why I go 3 bars up plus a tick, because that right there, you have to set through about 14, 15 handles of drawdown. I was trying to find one that really shows, yeah, like right here. Here we go. All right. So we get a crossing. We get the up triangle. We're all blue down here, so everything's set to go up. Deep pullback. I mean, look at the pullback. It comes all the way through the 216, but doesn't cross outside the channel. So 3 bars up plus a tick. Okay. Here's one. We come back up into the channel. We don't cross over the 216. 3 bars down plus a tick. Here's one. Okay, so this one almost crossed. I would wait on this. This is a perfect example until we got back underneath the 216 before I would start looking for a trade. More than likely, this is what I would take right here. This John Wick, right there. I'd have confidence to take that trade. All right, I think we're going to stop it right here. So I should have the gist of what I'm trying to get to, the incorporation of the higher time frame with the entry chart. Now, I showed you 2 different entry charts. The one that I live stream every day, which is what I call my Optimus model. And I also showed you the 216 EMA channel. So hopefully it gives you some ideas, something to work on, try to refine and fine-tune your own trading setups. And if you're trading with us in the room, we'll see you at the opening bell.